Hi, welcome to the Market Alert for Monday, the 21st of November 2022. So stocks and gold, crude and yield curve tumble after week-long flood of hawkish speak. And then we see hawkish central bank speak pressures bonds while stocks are choppy during Friday as well. And speaking of central banks, FedCoin, it starts with its trial run. A cashless society would be the nail in the coffin for liberty, absolutely. And for freedom, offering centralisation, the likes of which Marx could only dream of. And of course, the piece de resistance to this, they announced full-scale trial run for implementation of US dollar replacement 2023. That means in order to bring about this, there's going to have to be there's going to have to be a financial catastrophe to switch from the current system into a new one. One word describes this scary new currency: programmable. So yeah, they will be able to program it, and then you will be able to be monitored in everything that you actually spend. So yeah, it's going to be interesting going forward, that's for certain. It might not be 2023, but who knows. But the fact that this is in the background should, it should terrify you, frankly. Anyway, let's move on. Economic news. We haven't got anything today, and it's going to be a light week because we're going into Thanksgiving this week. So used to be, in the old days, half-day trading on a Wednesday, closed on Thursday, and half-day on a Friday. Now, things have changed a bit, obviously, with the electronic markets, but US markets are certainly closed for Thursday, which you'll see there. So, bank holiday for the US on Thursday. Generally, the market is sideways to higher. There are the odd occasions when the market falls out of bed. We've also got FOMC meeting minutes on Wednesday as well, but that's already taken you into the Thanksgiving, so they won't be much to shout about either. What else have we got? We got flash news on Wednesday, and then just a few other bits and pieces, but a light week on news, which means it's good news for the market because they'll be able to move it to the upside. Gold silver ratio sideways to higher, back at 84 there, and again, not a lot to report with regards to this. So let's kick off, have a look at the stock markets for Friday. Some very interesting moves overnight, and I don't know the reason behind it, but let's take a look nonetheless. So in the Dow, you can see the market has gapped higher. Let's have a look at a smaller time frame to see the impact of this, and there you can see we've got a big gap higher. It's actually 538 points, this gap, when the market opened. I have no idea what it is, why it's happened, but one thing's for certain, it's now allowed the market to sit on the 200 MA in the 30 minutes overnight and try and bounce back. However, a market tends to fill its gap, so if it can break the overnight low, which is this one here, and I'm going to just draw this in because we won't have a low for this. So if we can break the 33,617, then the market's got a chance of actually going down and filling the gap. Otherwise, if it doesn't, then we take out the night high, or the overnight high there, of 33,779. So yeah, the daily chart attempting to move back there. And in fact, I'm going to go back to the 30-minute chart, and let's have a look. If we go from here down to the low, the 89 and 78 are the upside targets in this if the market does move higher when the German DAX futures open at 7 a.m. If not, and we break that 200 MA, then on the downside we can also draw in these areas of support as well. And you'll see 38 tying in with the 50 and the 20 bar there as well. German DAX in the daily chart, well, you can see it's more pronounced here where we've got this gap. And again, let's go down to a smaller time frame. Let's just have a look, see how big the gap was in the German DAX. So there's the close of Friday up to the open, and it's nearly 300 point gap in the in the DAX as well. Which, like I say, I have no idea why this has happened. I've seen reports of potential lockdowns and whatever in China, but that would have the opposite effect. Whereas here we're seeing the market move to the upside. So just like the Dow, I'd be inclined to draw this in for the upside resistance, and if we do break the overnight low, then back down towards the low. These would be the retracements here, and again you can see the 50 ties in with the 50, the 38 with the 20, and the 62 with the 200 MA as well. So you've got some major areas of support here where there is confluence of indicators there. In the 5-minute chart, well, there's the gap. You can see that from Friday's close to Monday's overnight open, they're straight above Friday's high. The market has moved down a bit, but at the moment is sideways to high. Bit of a move there, bit of an increase in volume, but we are overbought in the 5-minute chart. Let's just have a look at that in the 30-minute chart, and we can see that we're just heading back to towards being overbought in the 30-minute. Back to the 5-minute chart, and yeah, we're just starting to move up to a bit of a resistance area there. So just to confirm then, these are the areas of the potential resistance to the upside. Again, the 78, 89 and 62 are generally the areas where the market will struggle. And also, let's just put in the low, because the low of Friday is so far away. So the low overnight is 14,363, and on the upside resistance for the high, you can see that significantly higher there at 14,466. Just back to the daily chart, and I'm just going to compress the chart a bit, and I'm going to have a look and see how many points this market's put on since it put in its recent bottom. So from there to the high of last night is now 2,635 points. Massive move over the last month for the German DAX there. Wow, that is a big move, that is. So the market, like I say, showed a bit of weakness, but it won't for long. I'm sure we'll end up taking out the 14,466, as the market is going to be quiet this week for traders, and that means only one thing: there won't be any selling around and they can move the market to the upside, unless of course there's some black swan event that comes out of nowhere. And in the S&P, the market down on Friday, but overnight, again, prices gapping higher. You can see this massive gaps overnight. The market finding support. Again, you can do exactly the same here. Go from the high to the low. There's your fibs on that side. And if we break the overnight low and come down and fill the gap, these are the supports on the downside. So the overnight is easy to figure out where the low is on this one, because it's going to be the 3950, the BRN there in blue. And then overnight, it's interesting here with the S&P because it hasn't broken Friday's high. So you can keep Friday's high and the 200 MA there as a place of resistance for the S&P. In the FTSE 100, again, you can see the gap in the daily chart. In the 30-minute chart, there's your gap, and the market again still attempting to move higher. Interestingly here as well, that this is gapped to the high of Friday. So again, you can see where the high is in the FTSE. You've got all of these potential areas of resistance moving to the upside, and on the downside, if the market comes to fill the gap, then you can expect some resistance around these areas here as well. But there's a lot of support in between with 3 averages there as well, and a psychological area. And in the currencies, these also gapping, which is really, really odd. Like I say, I wish I could find out what it is, but I have no idea. GBP, JPY gaps higher as well. This above Friday's high, and there you can see the markets pull back to the averages, found support with them, which is why I'm pointing out the averages in all of the stock markets, because you can see the effect it's had here, that the market has bounced off these areas of support. In the pound, same thing, the market gapping higher. Again, we need to go down into a smaller time frame to see the gap. Nearly 100 points or pips in the pound there after declining on Friday. Maybe it was, too much on the downside and they just decided to bounce it back. I don't know. But you can see this one's come back, and it's probably the closest to filling the gap in any of the markets we looked at thus far. and you can see having broken through the averages, this one is looking slightly more bearish, and that will be because of the US dollar, which we'll look at now. So in the US dollar, as we said in Fridays, at the market's in an area where it's likely to find some support, and it's moved higher overnight. There you can see that we've moved up. No gaps in this one, a slight one there, but nothing like the 538 points you've seen in the Dow. So constantly moving up on the overnight, a nice steady up move there, and in the daily chart it's got a lot to go on the upside from the recent high down to the recent low there, which you can see. So that might put a bit of pressure on stocks if the dollar does move higher. Meanwhile, in the metals, we gapped higher and sold off in silver. These are the downside targets combined with the 20 bar and 50 bar moving average as well. In the 30-minute chart, there's a tiny gap there where the market's then moved lower, which you can see there. And the same in the gold market, gapping down and continuing lower. These are the fibs that we drew in on Friday, and again you'll see there's a bit of a in between the 62 and 78. The support is taken up by the 50 bar and the 20 bar moving average there. In the gold smaller time frame, we've got a gap here that needs to be filled. Maybe the consolidation at this level is trying to bring the market back through this area, but of course in order to do that, then the dollar will have to move lower, and at the moment, as we've seen, it's moving nicely to the upside. So gold under a lot of pressure there on the overnight market at the moment. Okay, so as we said at the outset, it's a no news day. We'll have to see what the market's going to do. It's going to make its own direction, given there's nobody wanting to sell into it at the moment. I think it's a bit of a given, isn't it? Despite we may get a bit of a shakeout to the downside to begin with. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.